Hi there, this is Bruce Rector, and I'm here today to talk about Are you ready for venture investors? This is a really relevant topic for very many closely held companies who are seeking to raise growth capital to expand and build their companies um, to get them to the next level. This is going to take me about, I don't know, 9 or 10 minutes, so I'll just ask you to bear with me. I think you'll find it of benefit. But before I get into the actual conversation, I want to give you a little bit of background about myself for those of you that don't know me or aren't familiar with me. My name is Bruce Rector. I've been consulting closely held companies for about 12 and a half years now, since the late 90s. Um, I have an undergrad in electrical engineering from University of Virginia with an MBA in finance and strategy from the Wharton School at the University of Pennsylvania. I was a central processor VLSI chip designer for a bit and then worked for a number of years with large corporates in finance. And I work with closely held companies in finance and strategy consulting, as well as having strategic, planning sessions and CEO roundtable groups. You can learn much more about me at my website, which I encourage you to visit, www.therectorgroup.com. So, are you ready for venture investors? Before we leap into the meat of this conversation, I do want to put a disclaimer out there that men much more often, really men and women, more often need to be reminded than to be taught. A quote from Samuel Johnson from a couple of hundred years ago. And the point of this is that I suspect most of you who are listening to this have probably been told all of these things, at least many of them, before this, but sometimes we need to be reminded about those things that need to be attended to in order to get to the next level. We need a little nudge in the right direction. So your overarching issue, of course, is that your company has a critical need for outside investment growth capital. If you don't bring the money in to grow the company, it'll never get where it needs to be, and in fact may cease operations. And you have this wonderful company addressing a magnificent market with a terrific management team and all the rest. It's growing rapidly. You just need that capital. And it's so obvious that really any investor should just step up and write you, a check for $5 million or whatever you're raising. But let's look at things for a minute from the investor's perspective. Believe it or not, and this may be astounding to some of you, they actually do not feel a moral obligation to invest in your company. But they do have a legal fiduciary obligation to their investors. They've raised money from endowment funds or whatever, from retirement funds, from wealthy individuals, whoever it may be, and they have a legal duty to carefully vet their investment opportunities, and they see a lot of them. So, given that they've got this legal fiduciary duty to their investors, what does that mean to you? Well, it means that management must put forward the most compelling story possible when soliciting outside investment, and that means certain critical issues have to be addressed beforehand, before you go running down the capital raising trail. You've got to take care of some things at home, so to speak, to maximize the probability that a capital raise will actually occur, that you'll succeed in raising the money. I think you need to be aware that it's an undertaking fraught with risks. There's absolutely no guarantee, even though you're very nice people and have wonderful companies, no guarantee that you'll actually succeed in convincing someone to step up and make the investment that you require. So what are some of the steps you need to take to get your house in order? Well, you need to be able to demonstrate you're addressing a compelling market, a market that is growing, hopefully rapidly growing and substantially unaddressed. And it would look something like this, where the market itself is growing rapidly and revenue is sort of trailing behind your revenue. And in fact, in real life, your revenue would be a lot smaller than that green bar you're looking at right there. Now, I will say, if it's a large market that isn't growing rapidly, but it's big enough and is substantially unaddressed or not going to be addressed in the unique way that your company is going to address it, that can be a pretty compelling story too. So demonstrate you're addressing a compelling market. Step two, You got to have a robust, credible management team. The team has to have relevant backgrounds and hopefully strong credentials. Um, and if you don't have that, you got to have a plan to create such a team. I've heard more than one venture investor say, "I'll take a C, grade C, business plan and a grade A management team any day over the opposite." They want to, it's just a matter of reducing risk to them. They want people in place that they have a high level of confidence can actually execute, period. So you must have a robust and credible management team. And if you don't have that, you need to figure out how you can augment the current team so that you have a really strong management team. Okay, step 3. If the company's pre-revenue, you got to have a plan for rapidly achieving revenue. You need to be able to very succinctly articulate sort of the business case, economic drivers behind the business plan and the path to revenue. You need to be able to do so in an elevator pitch, not so much because you're necessarily going to be giving that information in an elevator pitch, but if you stumble around in a conversation or a presentation to potential investors and can't be pretty articulate and quick about that, you're probably going to lose their interest. So have a plan for rapidly achieving revenue with milestones attached. Like in 3 months or 30 days, something's going to happen, and then 3 months down the line, another something's going to happen, and in 6 months we start generating revenue. Whatever the time frame is, and it probably needs to be sooner than later if you really want to attract investors. Step 4. Management has to clearly understand the costs of building out and growing the company. And if you can't do that, you need to go back to the drawing board. Because if you think about it, you're raising the capital to finance the building out and growing the company. In other words, if you're raising $5 million, the investor is going to want a level of comfort that management has thought very, very hard about why they need the $5 million and what they're going to be spending it on. That's called use of proceeds in the business. You're going to be expected to list out, the 6 things that you're going to be spending the money on, and probably in what time frame. If you can't do this, you need to go back and think about it very carefully, and really it involves a lot of financial modeling. And because the investor is going to be looking at that model to understand how you think the company is going to grow and behave. And then last, and I don't know if it's least or not, probably not, you need to get your corporate governance documents in order. And by that, I'm talking about things like articles of incorporation, shareholder agreement, operating agreement if you're an LLC. Those documents that spell out things like who owns how much of the company, and under what conditions can stock be bought and sold, how many people have to vote in order to consummate a transaction. I call it defining who's on first. You're laying out kind of the rules of engagement between the shareholders, and those must be gotten in order before you even begin this process, because that'll be the first thing that any investor will look at, or one of the first things will be sort of quick legal due diligence to make sure that the shareholders who are talking to them are even capable of consummating a transaction. So just to remind you, investors don't feel a moral obligation to invest in your company, and they do have a legal fiduciary obligation to their investors. It means they got to be careful and thoughtful about how they invest, and the case that is made to them by people soliciting an investment has to be compelling. So you want to demonstrate a growing market. You want to have a plan to develop a strong management team. You need a clear path to revenue. You need to very clearly understand the costs of your growth plan, and your corporate governance documents absolutely have to be in order. Thank you very much for your time.